Hello traders. Welcome to today's Pairs of the Day update. Let's take a look at the latest movements and key factors affecting the Japanese yen, JPY, US dollar, USD, and Canadian dollar, CAD. The Japanese yen is gaining traction against the US dollar, thanks to Japan's stronger than expected economic performance in the second quarter. The country's gross domestic product, GDP, growth has exceeded expectations, which bolsters the case for a potential interest rate hike by the Bank of Japan in the near term. This renewed optimism around Japan's economic outlook has provided a boost to the yen, making it a stronger contender against the greenback. Japanese Economy Minister Yoshi Takashindo has expressed confidence in the nation's gradual economic recovery, highlighting improvements in wages and household incomes. He also emphasized the government's commitment to closely coordinate with the Bank of Japan to adopt flexible macroeconomic policies. This collaborative approach aims to sustain economic momentum and provide further support for the yen. The US dollar has found some support from rising treasury yields, which helped to stabilize its position against the Japanese yen. However, the greenback's upward momentum may be capped due to increasing speculation that the Federal Reserve will cut interest rates by at least 25 basis points in September. This potential policy shift continues to weigh on the dollar's future prospects. The latest Consumer Price Index, CPI, data from the US has fueled debate over the Federal Reserve's next move, with markets increasingly favoring a modest 25 basis point rate cut in September. However, there's still a chance of a larger 50 basis point cut, depending on upcoming economic data. This uncertainty keeps the US dollar under pressure as traders await clearer signals from the Fed. The Canadian dollar is under pressure as expectations build for another rate cut by the Bank of Canada in its upcoming September meeting. Economists are pointing to persistent economic weakness, rising unemployment, and cooling inflation as reasons for the central bank to ease its policy further. If realized, this could weigh heavily on the Canadian dollar, especially against the US dollar. The US dollar to Canadian dollar pair has been trading with mild losses around 1.3480, as the US Federal Reserve's dovish tone continues to influence market sentiment. Fed Chair Jerome Powell's recent comments suggest a readiness to ease monetary policy later this year, which has dampened the greenback's strength. Investors are now closely monitoring upcoming US economic data for fresh clues on the Fed's policy path. Now, let's move on to the technical analysis and check out the charts. We have opened the 4-hour chart of US dollar to Japanese yen. The price is currently moving around the 20-period moving average. The stochastic indicators are crossing lower towards the oversold area, suggesting a potential downward movement. For support and resistance levels, we have identified 143.43 and 142.27 as support, with resistance levels at 145.46 and 146.60. If the price moves lower, it may find support around 143.43 and potentially extend down to 142.27. On the upside, resistance could be encountered near 145.46 or potentially extend towards 146.60. Now, let's switch to the 4-hour chart of Canadian dollar to Japanese yen. The price is also moving around the 20-period moving average. The stochastic indicators are crossing lower towards the oversold area, indicating a potential downward movement. For support and resistance levels, we have identified 106.39 and 105.59 as support, with resistance levels at 107.99 and 108.80. If the price moves lower, it may find support around 106.39 and potentially extend down to 105.59. On the upside, resistance could be encountered near 107.99 or potentially extend towards 108.80. Always remember to consider your risk management strategy before entering any trades. That's it for today's update. See you in the next video.